folks, Dan Frio here, and I decided to take my show live today. So we are pre-recording a show for later today, and I just wanted to kind of show you behind the scenes of what we do and how we do it. So you won't be able to hear the producer on the other side, so if I'm talking to somebody and you kind of get lost there, that's kind of what's going on. So he'll give me a cue here in a second. We will go live on radio, and just watch and follow along. Alrighty, George. Welcome to the Mortgage Update with Dan Frio, and I, of course, am Dan Frio, and you hear me every day on AM 1160. Hopefully you're following me on YouTube, and I have YouTube Live today that I'm doing. And the best way, I always start every show by kind of saying these things. The best way to check me out, to find out everything you need to know about me, is just Google me. My name is Dan, D-A-N, Frio, F-R-I-O. And you can find me basically all over the web. I am a mortgage broker in Chicago. If you're listening to AM 1160, you've heard me for about 10 or 12 years on here. So let's get today. Today I want to go over some questions, and I wrote these down. I got these questions from my YouTube comments, and it's a lot of, I have probably 225 videos on YouTube, and every day people comment, and I try my best to reply, and or I get a lot of phone calls as well. So today I want to go over the first segment of the show, I want to go over common questions or repetitive questions that I get from viewers and listeners. So let's get to it. I'll quit boring you with that things. So YouTube questions, FAQs, I'll put this. So one of the questions that I get a lot is in regards to seller credits. So when you're buying a home, here's what happens is you have you need a down payment. Okay, so let's say you're going with an FHA loan and you need 3.5% down. Okay, what I mean by that is if it's a $100,000 purchase, 3.5% of that is $3,500. But that's not all the money that you need. You also need closing costs. So what those costs are, it depends on what lender you're going through. Hopefully you're using me. Because most of our costs, in most cases, are basically probably in the range of $500. The norm, if you Google it for your area, just say, I'm in California. I get a lot of phone calls from California, Texas, Florida. Just Google and say the average closing costs to purchase a home in LA, and you'll see things there. In Chicago, the average closing cost from lenders ranges, in my case, $500, but the norm is $2,200 to $3,200 in fees, okay? That's just, I call those junk fees. So if you want to avoid about $3,000 in fees, call me. I'd love to help. However, there are more fees involved than just that. You have all your legal fees. So when I'm explaining costs to people, here's what I go over. There's two buckets. There's the bucket of how much your fees are going to be from the lender specific, and then the next bucket is the cost for the attorneys and legal fees, such as you're going to have recording fees, tax stamps, deed transfers, filing of deeds, a closing fee, a title insurance fee. I'll go through other videos, or I'll put together other videos kind of relating to those, and we'll go line by line to show you or to explain to you what those fees are. So you got the lender fees. Let's say the norm, you don't use me, too bad. You lost out and you spent $3,000 more than you needed to. So you have $3,000 in junk lender fees. Now your legal fees are going to be another $3,000. So you need your down payment money, the 3.5% of your down payment, plus all these other fees, which in this case equals $6,000 more. So you're buying a $100,000 home. You need the $3,500 down, plus the $6,000 in legal fees equals $9,500. You don't have $9,500. What do? There's one of the biggest things or most common things that I do, I work with the realtors with this, is I say we want to ask the seller to issue us a credit to pay those legal fees. It's legal. I think it's line, they just changed the contracts here in Illinois. I think it's line 47 on page 1. It says credit, seller credit. What that is a closing cost credit, okay? So we're going to think of it as a rebate check. The seller is going to sell you the house and then give you a seller credit rebate check for $6,000. We're going to take that rebate check and we're going to apply that to your legal fees. Okay? That's a seller credit. And that credit can only be used for your closing costs. You can't use it toward your down payment. So again, you need your down payment, but then you have these closing costs. I reference a lot of times, most people reference that credit that you're going to receive is a seller credit. It's technically a closing cost credit. So we're making the seller, or kind of in this situation, we're moving those costs and we're having the seller pay those costs. Hopefully that made sense. So if you don't have a ton of money and you're looking to buy a house, you only have that percentage down that you need, and we're going to go through those percentages in the latter part of this section, or the second part of the show. But a seller credit, again, you want to negotiate that to have the seller give you a credit to pay your closing costs. Hopefully that makes sense. Okay, the next thing is, I get this every day. Dan, what's today's 30-year fixed rate? Well, I can't answer that question. And if somebody does, they're completely guessing. And here's what I mean by that is I always reference interest rates as a la carte. What I mean by that is if you go out to dinner and you go to a place and you might have been to a steakhouse or something of that sort, and you buy a steak. The steak's $25. Then you want to add a salad. The salad's $5. Then you want to add a baked potato. That's $5. Then you want to add, you want mushrooms on that steak. Well, that's another $3. Everything is added on. So here's how mortgage rates work. If I sent you a mortgage rate sheet, I'd have you completely confused. There is no, you look down and say, the 30-year fixed rate is 5%. No, there's factors involved. The biggest factors involved in this is, what is your credit score? Okay, that is an a la carte item that will add to or subtract from your rate. What is your what they call loan to value? The loan to value is the loan amount divided by the value of the home. So let's make this simple. A loan amount of $50,000 on a $100,000 loan or value is 50%. 50 divided by 100 is 50%. So the next line item in that rate sheet is, what is your loan to value? Is it 50, 60, 70, 80, 90, 100? That is a plus or minus to that floor rate. And I'm going to piece all this together in a second. Now, what kind of property is it? Is it a condo, a townhouse, a single family home, a 2-flat, a 3-flat, a 4-flat? So those are the different styles of home. Manufactured, modular, all those are different styles of homes. That will add to or subtract from that base rate. The next thing is it your primary home? Is it an investment property? Is it a second home? That is also minus or plus to the base loan. So let's go about this. The base rate today, just making this up, is 5%. Okay? You have a phenomenal credit score, 780. Okay? So now that's no deduction from that base rate because you have the best rate, the best score in town. But you're buying a condo. Well, that's going to subtract from or add to, I'm going to rephrase that, that's going to add to that rate. So now your factor rate or your base rate is 5, but banks add a condo bump to that rate of, and again, I'm making these numbers up, they change daily, and there's all kind of, every bank has a little different factors with this. But because it's a condo, they're going to add 0.25 to the rate. So now that rate, if you're buying a single family home, is 5, but if you're buying a condo, it's 5.25. Okay? So now the next thing is, we're going to say it is an investment property. Oh man, that's another add-on to the rate. So the rate started at 5, You're buying a condo, so that's now 0.25 more to the rate. Plus, it's an investment property, higher risk. So what happens is the lenders add another, and again, these numbers aren't precise because they change daily and by lender. But let's say that they're going to add, because it's a rental property, they're adding 0.75 to the rate. So now we have the base rate at 5. We have the condo adding 0.25 to it. And we have a rental property, and it's an investment property. Now they're adding another 0.75 to the rate. Now that rate on that specific property is 6%. And there's more factors involved to it. So if you call me, I don't know. Basically what I'm going to ask you, and I tell this to all my clients, it's a puzzle. Let me get the pieces of the puzzle. I'll put that puzzle together, and then I'll get back with you and say, okay, here's exactly what the rate is. I'm not trying to divert that question, but if somebody answers you the rate's 5, they don't know if it's a condo, a single family home, a townhouse. They don't know if it's a rental property, your primary home. They don't really know your loan amount. They don't know that loan to value that we discussed. They don't know anything about that. They cannot quote you a factual rate. So those are things that really tie into the interest rate. So again, if you called somebody and they said, oh, today's rate's 4, it's a guess, because they don't have those pieces of the puzzle that's needed to calculate that rate or to accurately quote you a rate. So we're coming to a break here. If you would, stay tuned, because we're going to, in the next section, I'm going to go through some more commonly asked questions from YouTube viewers and callers, people that call in. But if you'd like to reach me personally, please give me a call. It's 630-338-1160. You can also find me on the web at 1160mortgage.com. And also, please check me out on YouTube. We'll be right back. Stay tuned. We're on a break right now, so I might talk a little bit to somebody. It's George, the producer, in the other room. Sup, George? Oh, did I not? He's yelling at me. He said I'm talking at the YouTube channel, not in the mic. So, okay, sorry. I'll try to turn this. Okay, okay. Welcome back to the Mortgage Update with Dan Frio, and I, of course, am Dan Frio, and thank you for tuning in and coming back. So this segment, what we're going to talk about, I get this question a lot from people that I've already taken an application from. I've sent out the pre-approval. They now have a house under contract, and they now start getting the disclosures. Okay, they get their disclosures from me, and they see on there the rate is floating. They're like, the first thing they do is call me, and they're like, Dan, I do not want an adjustable rate. Well, that doesn't mean you have an adjustable rate. What that means is we have not yet locked in your rate. And here's my best explanation of that. Okay, so you like, or you're interested in buying Google stock. Okay, so you watch Google stock. You want to kind of pick a timing of it on when you want to buy that stock. Okay, that is your float period. Follow with me. So now you like Google stock today. Right now, you see it, there's a little dip in it. You know that a little bit of bad news came out, but you know earnings are coming out tonight, and it's a good time to buy. So now you bought the stock. That is meaning, in our case, with rates, now we locked in your rate. So you own that Google stock. So again, let's go through this. While you're watching Google stock is basically the same as you floating your rate. We're watching rates. Now you went in and you bought Google stock. Well, that means we locked in your rate. Now we own that rate. And we have a duration of time to get you closed and into that house or into that loan within that time duration of our lock. So hopefully that makes sense. Credit scores. This is the huge question from a lot of people. What credit score is used? Where do you find those scores? What's the most accurate? What do lenders use? All those questions I get daily. So there is a